I can't take any credit for helping them navigate that. But there was one moment about, a few months after I had invested, they had a database failure that ended up inadvertently deleting some customer data. And that's kind of a big deal. I grew up at Salesforce. The number one value at Salesforce was always trust.
Trust.
If you lose trust with your customers, you are done. And certainly deleting customer data can really quickly destroy trust with your customers and destroy a company. I remember a manager at Google telling me, I told my entire team to stop whatever they're doing. I can give them better education on crisis management, their remediation, other than to watch this live stream. The best feeling I have as a VC is kind of looking at my calendar at the beginning or at the end of the day and having met like 4, 5, 6 awesome founders. There's nothing better as a VC than that. Just at the end of the day, just your head spinning with excitement. Where to even spend your time over the next few days because you met 4 or 5 amazing people with like amazing ideas. That is freaking awesome. I just love that part of the job. Nobody loves that pricing strategy. But kind of knowing what true north is and what are you optimizing for, having that clarity of thought can become really helpful both with strategy and business model because it prevents you from kind of this like short-term mindset of like optimizing for like the short term. Once you have that longer term clarity, it's easier to prioritize short-term decisions.
Welcome back to Tank Talks. I'm your host, Matt Cohen, and I'm thrilled to have our friend and long-term VC investor, Villi Iltchev from Category VC back in the tank. Villi first joined us way back in July 2020, right at the start of COVID and the beginning of this podcast. Let's just say we've come a long way since then, and I'm excited to dive into how the venture world has changed and what he's been up to. On this episode, Villi shares his journey being at the forefront of venture investing for over a decade, spending time at Salesforce in its earliest days as a corporate VC, and working closely with GitLab in the early stages, and also cutting his teeth at August Capital before striking out on his own to launch Category VC. Villi has seen firsthand how trust can make or break deals and how founders and VCs can foster genuine long-term partnerships. So buckle up, enjoy the conversation as it's packed with tons of insights on building trust, staying relevant, and pushing boundaries in venture. I hope you enjoy the chat. Now let's jump into the tank. Thanks for joining us again in the tank today, Villi, for the second time.
Well, thanks for having me for the second time.
The last time you were here was at the very beginning of COVID, and we had just started the podcast in July 28th, 2020. So I promise you that we've improved a lot since then. So I appreciate you giving us a second chance. We've known each other, Villi, for about 6 or 7 years now. I've always enjoyed so many conversations with you, meeting you in San Francisco. You bring so much empathy and honesty to this industry. But for some of our listeners who may have missed our first chat, it'd be great if you give us a little bit of your background, how you ended up in your journey through investing and venture, and basically how you started up at Salesforce Ventures, but when they were just getting started with their corporate venture arm.
Well, I have spent about half of my career as an executive operator at different enterprise software companies. You alluded to Salesforce, but I was at HP before that, and then LifeLock after that, and Box a couple of years kind of before and after the IPO. And then the second half of my career in venture, we can talk about how I got into venture a bit by accident. That was not the plan or goal that I had, but life took me in that direction. But yeah, I started my career actually in finance. Largely because that was the only job I could get. I was on a student visa going to business school at the University of Virginia, and the only job opportunities I had at the time were consulting and banking. I didn't want to do either, but those were the only 2 options I had career-wise. Those are the only employers that were willing to sponsor international students. And so I ended up starting my career coming to San Francisco and doing tech banking for a few years. Longer term, I knew that's not what I wanted to do. And then kind of after I got married and got a green card and all that, I had more job flexibility. And then I branched out. And actually, when I was leaving banking, I called Salesforce first. I could, they were one of my clients when I was in banking. I really loved the company. It was kind of obvious to me at the time where the puck was going with software moving to the cloud. And Salesforce at the time was still a tiny company, relatively speaking. It had just gone public, but extremely relevant. It was probably bigger than the entire SaaS ecosystem combined. But as I said, Salesforce was still a relatively small company. And when I reached out to them, they said, we don't do anything. We don't really need somebody with your background and skill set. And so I went to work at HP. HP brought me to the team. I was on the strategy team there, leading their strategy for the enterprise hardware business, or servers, storage, and networking equipment. And I was there just for about 15 or 16 months because Salesforce called me back and said, hey, we're growing. We want to build a proper investment team. We want to start identifying the pockets of opportunities and growth in our ecosystem and figure out kind of how to expand the TAM for the company, how to play it. We need somebody kind of to help us put that together. And so that's how I got to Salesforce in 2009. And that turned out to be one of the best things that happened to me career-wise, because I was at the right place at the right time for the right company, right founder, extremely ambitious. And that was just a really great experience because Salesforce was an amazing company with amazing access. We had tremendous access on the investing side, and we could invest in a bunch of amazing companies, now public companies, from Box to Dropbox to MuleSoft and HubSpot and Zendesk and Gusto and Twilio. I mean, DocuSign. We just had an amazing opportunity and we took full advantage of it. And then the other part of my job was more strategy, given like where the ecosystem is going, what are the relevant spaces and pockets that Salesforce should be a player in, should own, that were strategic to the company, and how do you execute on that?
Villi, do you think it's fair to think about how Salesforce was at the center of the sort of cloud frontier and SaaS ecosystem, similar to the way NVIDIA is today, where they can see everything and choose which ones to take a shot on because they have so much insight of where the puck is going as the largest player at the time?
Yeah, I mean, very similar, for sure. Different in that NVIDIA is obviously a hardware company. They're a vendor to the ecosystem. So I don't know how this plays out over time. I would expect a lot more competition in that space.
It's not like you can offer a free Salesforce enterprise contracts for an investment like you can with NVIDIA GPUs.
Exactly. And NVIDIA is definitely incentivized to create competition among their customers. So it's not a surprise that they are offering GPUs to emerging cloud vendors. What is it? CloudWeave or whatever.
Yeah, CoreWeave.
62%
of their revenue is Microsoft.
And so it's not surprising that they have offered capacity GPUs to these types of emerging infrastructure vendors, because they do want to create competition among their customers. They don't want to have it centralized among three clouds, which gives their customers more leverage. So I think it is similar, not exactly the same. I would say it is very rare in a particular space that a vendor emerges that has incredible weight and kind of in the ecosystem, I would say there are probably two other companies that come to mind in the software space that have similar leadership roles and kind of weight. I would say in e-commerce, that's Shopify, of course. They see everything. They are the dominant player in e-commerce. They probably have tremendous access in that ecosystem and have to use it very wisely. And they have so far. I think they've done a great job. Another similar company, I would say, is probably Stripe.
I was going to say Stripe for sure.
That has tremendous weight in that ecosystem. So every 5, 6, 7 years, like a company emerges that has that type of power and influence.
So what was sort of the most memorable experiences during your time at Salesforce? Like you said, you had such a unique advantage point to see the growth of SaaS at the time of 2010 and the whole run we saw in those early days of Enterprise 2.0. And what were some of those insights that you gained that you still kind of rely on today when you invest?
I mean, there's so many on the business model side, on the strategy side. I'd say what I learned at Salesforce probably that's most helpful to me to this day is not what is exciting, but how to stay out of trouble in a sense. What are some of the dead ends that kind of seem exciting at the beginning, but longer term, there is no path for a large company. So kind of, I use that experience a lot and kind of think about how ecosystems and markets will develop over time to help me stay out of trouble. But it was a tremendous learning experience. Like at the time, nobody even knew how to value these companies. And so would like go to buy something. Candidly, investors, private and public investors had no idea how to value these assets. It wasn't until recently, I mean, even to this day, I see people commenting about sales and marketing spent as a percentage of revenue for a SaaS company. I'm like, you really don't understand how this business works. This is a meaningless metric. But in traditional industry, that's a meaningful metric. In traditional software or in any industry. In SaaS, that's not a relevant metric. Your
explain to our listeners why S&M is not meaningful for a SaaS company like that.
As a percentage of revenue. And the reason is your revenue is what you did in the past. This is
forward pipeline.
It's the cumulative output of the company over time. The sales and marketing spend is what you spent this quarter. And what you spent this quarter is to acquire new customers or upsell your existing customers. And so the relevant point of reference for sales and marketing is what was the output of the company in this quarter as exemplified by your bookings defined as new revenue, new ARR. And I think the industry has gotten more educated on this, but like 15 years ago or more when I was doing this, like it was totally the Wild West. So just a lot of insights on business model. How do you value these things? The ability to like, can you build a cash flow model for a SaaS company? How do you even do that? And we had to because we were buying these companies. And so like, I couldn't get in front of the board and just say, 8 times revenue seems reasonable. Like whatever, why? You had to like actually do the work, understand margin structures and, cash flow generating capacity of these businesses. And so there were just a lot of learnings during that time. So there was a lot. One of the most impactful moments at the time was the transformation of Salesforce from an apps company into a platform company. People to this day kind of dismiss Salesforce or joke about it, like we don't even know what Salesforce does. And the reason for that is they do a lot of things. What do you want it to do? It's actually a platform company. People run their entire business on Salesforce. All kinds of workflows end up running on Salesforce. And so that was both the organic platform Force.com that we launched and made into a big business at the time, but also making Salesforce more relevant to developers. So one of the big pushes we did in 2010 was how do we make Salesforce more relevant to developers, which kind of led to the acquisition of Heroku, which was an acquisition that I led and really successful, kind of transforming how Salesforce was perceived at the time. So there were a lot of really memorable moments and learnings from that time that I use to this day.
I hear from people inside of Salesforce Ventures and corporate side that, nowadays, like Mark will say, hey, this is an area that we want to go full on for this year. And this is where we have a gap potentially in like earnings and stuff. It used to be like, go buy revenue for these gaps in our revenue, missteps. But now it's like full on thesis driven towards like robotics or AI infrastructure or things like that. Did you notice a change when you were there from when you started to when you left about how they thought about accretive acquisitions versus like inorganic revenue or organic revenue acquisitions?
Yeah, I mean, Mark was and is to this day probably one of the, if not the greatest, storytellers in the world and marketers.
For sure.
And so he does an incredible job of identifying new and emerging trends to its agents and really transforming or rallying the company around this massive trend and making Salesforce continue to be relevant to their customers and continue to be kind of at the forefront and cutting edge. So Mark has always been that founder, which is why it was amazing to work for him because, we were, obviously had to be prudent and financially driven and all of that. But at some point you need a founder that has conviction and is willing to be aggressive when a new and emerging trend emerges. There were many of those over the years, platform, social, like whatever.
Right.
And so he was always that person. I mean, but he, there are a lot of really smart people at Salesforce too. So, it's not a top-down type of place necessarily. Certainly Mark, whatever, when he is excited about something, it happens. But there was plenty of opportunity to work with him to, help him understand new things or why new things may be relevant to us or exciting, whether it is in the analytics space or whether it is kind of in the developer tools ecosystem. So, it's been a long time since I left Salesforce. I don't know exactly how the place is
For sure.
today, but certainly, Mark has his the things that get him excited, and there's plenty of opportunity for different teams internally to set strategy and bring him along.
Yeah, for sure. I mean, I want to double down on some of the lessons over your career of investing because it's been amazing. Obviously, one of your most notable investments was GitLab during the early days when you backed them. Can you recall any significant challenges or mistakes the company had made in the early days that could have been fatal and how you helped them along with the team, like overcoming those and got them on the path to the success they have? And sort of what your role as an investor was during those periods?
Yeah, I mean, I can only recall one moment that I perceived as potentially fatal. And I can't take any credit for helping them navigate that. But there was one moment about, a few months after I had invested, they had a database failure that ended up inadvertently deleting some customer data. And that's kind of a big deal. I grew up at Salesforce. The number one value at Salesforce was always trust.
Trust.
If you lose trust with your customers, you are done. And certainly deleting customer data can really quickly destroy trust with your customers and destroy a company. And so database failed, they deleted some customer data. It was a mistake on part of our internal employee, a developer. And the way Sid handled it at the time was, GitLab was always an extremely open public company. Everything was open. The employee handbook was open. Their roadmap was open. Customers can, contribute to the roadmap. It was an open core company. So totally open company, open kimono. And the way they decided to handle that crisis was in a very open way, which was to live stream on YouTube how they were handling that crisis moment. And so it turned out to be a really impactful event in the industry because lots of people across industry at big companies, at Google, at startups, basically ended up watching that live stream and kind of seeing how GitLab was dealing with this crisis and remediating the issue. I remember a manager at Google telling me, I told my entire team to stop whatever they're doing. I can give them better education on crisis management, their remediation, other than to watch this live stream. And so we watched it the whole day. It was like at the end of the day, I ended up sending them a bottle.
It's like a lunar landing.
Because it was just an amazing moment. And because they handled it in such transparent and public way, ironically, it ended up building more trust with their customers.
Totally.
And so they emerged out of this crisis in even stronger position. Customers knew that they're not going to scrub something under the rug. They're not going to hide the ball. When something happens at GitLab, they're very transparent and open about it. And Sid handled it extremely well. And
did you agree with the idea when they presented it at first? Were you like, wait, this could be a bad idea, or no?
Sid didn't even ask me. He just did it.
Probably better.
Sid just did it. That's how he wanted to handle it.
Wow.
And it was just an amazing moment. On things that I think I helped and Sid gives me credit for, I actually don't remember this moment, but Sid talks about it publicly. I think after the first quarter after I invested, they actually had a miss in bookings. They had committed to doing whatever, $1 million in new bookings, and they did 600K or something like that. So when I invested, I think GitLab was a $3 million in ARR company. It was a relatively small company. And Sid was like super worried about it. He talks about it. He says like he talked to his coach before the board meeting. He was like really worried, like, oh my God, I wish the first quarter investors are going to fire me. And I don't actually remember that moment, but he says my reaction was like, Sid, like, it's all good. I don't need you doing bad deals, discounting the product or whatever to squeeze something within the quarter. Whatever I said, I was like, it's all good. And like, I think to him, that was a very impactful moment because he was like, oh shit, I was like super worried about this. My investors handled it in such positive, constructive way that gives me the confidence now that, I can execute, I can be honest, I can be transparent, I can have honest conversations with them as opposed to worry every time something goes sideways about how the conversation is going to go. I would say one thing I do take some credit for that Sid has also talked about publicly is and this is largely informed from my Salesforce experience, GitLab was an open core company, which means they had, the ability for people to whether the free version of the product or the paid version of the product in their own cloud environment or on-prem, whatever, and run it themselves. Or they could buy the cloud service, the SaaS application of GitLab. But they also had a third quote-unquote product, which is we will manage your own instance of your product in our or your environment. And what occurred to me at the time is that's a completely non-scalable business model. If it's a sophisticated customer and they can run it themselves, then they should run it themselves. If it's a less sophisticated customer that wants to buy a service, they should buy the cloud app. This in-between thing will kill you, because now you end up supporting hundreds, eventually thousands of instances of your product for third parties, for customers, in a completely non-scalable way. And so we had 165, I think, customers at the time on that product. And I managed to convince Sid to sunset that product, end of life at the only two products. One is the self-hosted product, and the other one is the cloud product. There's nothing in between. And that worked for a very long time, and Sid thinks that was quite impactful for the company. The other thing I kind of, back to my Salesforce days, convinced him to do is GitLab was a multi-products company almost from the inception. Sid realized that the opportunity for the company, because it was open core, was to bundle the entire software development lifecycle into one product. That was the core value prop. We may not have the best feature in any individual kind of area of the software development lifecycle, but it was the value was that it was one product. And initially, we were monetizing features. If you want CI, you pay extra for that. If you want this, like issue tracking, this, if you want like the linear ticketing system, like pay extra for that. Zach said, that's a mess. Like, let's create 3 SKUs. We can even create an aspirational SKU that was $1,000 per month. And at the time, we had an aspirational SKU. We told customers, eventually we're going to charge you $1,000 per month. At the time, we were charging like $50 or $30 a month. And we told them, we're going to put so much value into these SKUs over time. We're going to bundle so much functionality that eventually you're going to be willing to pay $1,000 per month. And so we went back to 3 SKUs, the starter, the business, and the enterprise SKU, simplified how they went to market and how they bundled the product. And that was...
That's great advice, Villi. And it still applies a lot today to startups, especially when companies are so obsessed with like fulfilling maybe customers' requests and demands constantly, and they don't level themselves up to like what is impactful and scalable while not also killing yourself by 1,000 cuts. We have biweekly calls with our founders and we ask them like, what is the biggest thing artificially or really constraining your business right now? And we pull apart this layer of cakes of like, well, this, and this. And then it all comes back to exactly what you said. It's like, well, maybe you're just confusing your customers with what you're offering them. Why are you offering them this? It's like, well, we had a handful of customers that wanted it. Kill that, sunset it. You don't need it. And it's really good to have a founder or investor like you as founder empathy to the problem, but also can explain to them the hard truth of what maybe they can't admit themselves because they're so married to the product they've built.
I think business and pricing models are tough.
Oh, for sure.
And usually there's no right answer. There's a set of trade-offs, and you need to understand the set of trade-offs. Nobody loves that pricing strategy. But kind of knowing what true north is and what are you optimizing for, having that clarity of thought can become really helpful, both with strategy and business model, because it prevents you from kind of this like short-term mindset of like optimizing for like the short term. Once you have that longer term clarity, it's easier to prioritize short-term decisions. So
yeah, for sure. Well, Villi, I want to talk about where you are today. You had a successful career at firms like August Capital and Two Sigma Ventures, but you eventually decided to strike out on your own with a new fund that you announced called Category VC, raising $160 million fund for a first-time solo GP. So congrats on that. I would love to hear sort of what the culmination was for you to have this unique vision for setting out on your own, and what were the biggest sort of challenges, but also inspirations that led you to make this decision?
Yeah, I mean, I think a few things came together for me. To be completely transparent, when I left August Capital 6 years ago, I thought about starting my own.
Right.
I had a few conversations to but candidly, I didn't quite have the confidence or the courage to do it. I was still a relatively young investor. My track record was still relatively nascent. And I wasn't in the place in life where financially I could even afford to go tell my family. I don't know that I may take a couple years off and, you know, not have any income whatsoever, try to start a new venture capital firm, family mortgage, like life. I was worried and afraid. And so I didn't pursue it at the time. Um, who knows? Maybe I should have, maybe I shouldn't have, but that's in the past. And so I would say as I spent, 5 years at Two Sigma Ventures, which was just a great experience, my confidence was going, my track record was going. And so part of what gave me the confidence to explore this was that. The other part was the opportunity. I was starting to see a real opportunity to build a new early stage venture capital firm focused on enterprise software. I definitely started to see a gap in the market that founders weren't served well by what existed. And it was the combination of both where I was in life and kind of my personal growth, and also the opportunity I was seeing that allowed me to kind of build the confidence, make the leap last summer, and decide to start this new firm.
What were the surprises that you kind of had to learn on your own when setting up your first fund that you think other first-time fund managers should be aware of? Obviously, the life differences of like the salary conversations you have to have with your family and everything. But what were some of the other surprises when you struck out on your own that you didn't anticipate, but were probably happy to experience and will want to share with other solo fund managers thinking about splitting up on their own?
I mean, I think I don't know that I had a whole lot of surprises. Maybe one of the surprises I had was, and maybe it shouldn't be, but I actually found the investor community, the LP community, to be just an incredibly thoughtful group of people that knew the industry a lot better than I thought they did. And strong point of view on kind of where the industry is going, what will serve founders better, what type of firm should exist or shouldn't exist. And so this like product market fit for an investor turns out to be a really important thing. That was a bit surprising. I think not unlike startups, having the right founder for the right strategy with the right approach, going out and striking on their own, trying to build something new. That also applies and is relevant to to starting a venture capital firm. What gap in the market do you feel? What's your purpose for existence? Does the world really need another venture capital firm? Being able to clearly answer those questions is really helpful. And again, not particularly surprising, but I found the conversations I had with the investor community to be really high level, high quality type of conversations where, I better have really good answers to these questions. And you couldn't talk your way out of it. You actually had to have thought about these things in advance.
Yeah, I agree. I mean, the LP community has become much more sophisticated since even when I launched my first fund in 2018, just because the access to data, the conversations they're having with more LPs, that open LP community, and also the access of family offices getting more sophisticated internally with their own access to data and gathering a lot more of the insights, what's happening in the industry. Podcasts like this, I think, is also giving them insights to how GPs are thinking and building firms. Were there any meetings you had with either family offices or institutional LPs or endowments that you knew right from the beginning it wasn't a good GP LP fit? And how'd you carry on with the rest of the meeting?
No, I mean, I would say there were personality-wise the style of some people didn't match my style. But I don't think I had any negative or bad conversations with anybody. My goal should be the goal of any founder is to surround themselves with smart, sophisticated investors that have been in the business, will be in the business for the next 20 years, and can actually provide guidance to help you succeed and make you better. And so my goal from the very beginning when trying to raise this fund was to try to optimize for those types of investors that I thought can help me navigate. I'm a startup too, can help me build a better venture capital firm and provide me that honest feedback to make me better. So I approached it in this way. I really wanted to surround myself with great people. And I think I largely achieved that. Towards the end, you have a board in the venture world. This is called an LPAC, Limited Partner Advisor Committee. I wanted to be in a position where I can blindly pick that body, because I had surrounded myself with great people. And I think that should be the goal of any founder, like take money from people who you can blindly select your board members, and you've surrounded yourself with great people.
Yeah, Villi, I mean, you've been in the venture business for quite some time, and you've obviously had the ability to see how some bigger firms operate, and now obviously inside your own firm, seeing how smaller firms operate. What do you think about some of the practices or strategies that some of these larger and legacy venture firms have been employing in the last, several years that you think may no longer be effective in today's market, given how much the industry has changed?
I think there are a lot of side effects of venture firms becoming very large, becoming institutionalized. Some of them are positive, but there are also a lot of negative impacts on the industry from that trend. I think because these firms are institutionalized, I think broadly speaking, the sense of ownership among investors and the incentives for investors has changed. I think if you work at one of those larger platforms, your incentives, broadly speaking, are to deploy capital. Your incentives, broadly speaking, are to invest and build your track record.
You don't get paid to sit on your hands?
You don't get paid to sit on your hands, and you don't necessarily get paid to do good deals. Now, you may not make it in industry, but given the level of uncertainty of what is a good deal early on and the skill it requires to identify it, it'll be many years before anybody knows whether you made some good decisions. And so in the short term, I think the incentives are to invest and deploy capital, regardless of quality or valuation oftentimes. And so I think that has, broadly speaking, pretty negative consequences on the industry. I think a lot of the larger funds, hire people that have less experience, whether operating or even investing. And so when you work with those, they're dabbling early stage in seed in order to build their track record and reputation as investors. A lot of those people may or may not be around in a couple of years. There's pretty high turnover at that level. And so I think that impacts founders. Like the number of orphan startups is really high and growing, actually, where the partner that made the investment at a particular firm is no longer there. And I think that will continue to be an issue. I think, the conflicts among, portfolio companies is rising. I've heard many, many stories of all kinds of
I think we're also a fourth partner at one of the funds that we co-invested with. We led the pre-seed round and we're at the Series B. We're on the fourth partner.
That's quite common. So, and these partners are also not really empowered to even make decisions. So when it comes time for a tough conversation, the company needs additional capital to get.
Yeah, it's not their name on the phone.
And so they don't even have the ability to make these types of decisions. So it goes up the chain, and the startup is largely disconnected from the actual decision makers on their future. So there are all kinds of issues that are emerging. We'll see how this plays out over time. I don't control that. What I control is I want to give founders an alternative product, which is the opportunity I saw in the market, the opportunity to, have an early stage focused firm that has deep expertise in enterprise software, infrastructure, dev tools, in apps, only does early stage. Each investment we make is meaningful to the firm and important to us. And we're not going to take any decision lightly going forward because we just bought an option, and who cares if it doesn't work well and quickly, we can just move on with our lives. It doesn't impact the fund. No, every investment impacts our fund, and we care deeply. And so that was kind of the thesis I had, that if you're an enterprise founder, the industry is highly fragmented, lots of noise. Actually, very few firms that focus purely on enterprise software and have that deep expertise and can offer a different product. But also a large firm, a large enough firm to have flexibility around what types of deals we do. I didn't want to be artificially constrained to do deals, to invest in startups that only fit in my box. The check size has to be between $2 and $2.5 million for 10 to 12% ownership. And if it doesn't fit that, it doesn't fit our box. No, I wanted to invest in the startups I get most excited about, the best startups. And that may mean investing $1.5 million in a pre-seed round, but that could mean investing $5 million into a $6, $7, $8 million round. And so I wanted to have the opportunity to back the best founders, invest in the best startups, not artificially constrain myself to invest in just what fits in my box. I wanted to have a bit broader box that allowed me to pursue the best opportunities.
Yeah, I mean, your fund size for the stage you're investing in totally makes sense for the market we're in now. I got to ask though, with these funds that are dabbling at the seed stage and God forbid the pre-seed stage where we invest with a $500 or $1 billion fund, what do you think is going to happen where we have companies in our portfolio now that you're seeing where they're at $1 million in ARR growing, 10%, 30% month over month, and they're almost profitable, who don't even need to make it to a traditional seed or Series A raise to figure out their next go-to-market strategy? How has the industry changed because of technology like AI and the capital efficiency we're seeing these businesses getting to play into your strategy overall?
So I know that is a common theme and conversation. I actually don't believe that's a thing. I don't believe that is a real long-term trend where startups will suddenly become a lot more profitable, be able to get to scale a lot quicker with a lot fewer people. Yes, you see it from time to time. We've always seen it. We saw it 15 years ago with Zapier. We saw it 8 years ago with Notion. We saw it
with Cursor.
1 year ago with Cursor. That has always been the case where a startup with a really small team builds a great product that takes off, mostly product led, and that's a thing. But I don't think longer term that will become the default of how we.
Or the majority of the cases short term.
The reality is for anything that is substantive, meaningful, hard, it requires time. It requires engineering capacity. You have to, put, a lot of hard work into building something meaningful, which is not, easy to do or free. And I also think competition will only become greater over time. We're not going in an environment where there's going to be less competition. I think because of these tools, there's only going to be greater competition, and so I don't think we're going to change how we build startups. Startups are going to require capital. They're going to be in very competitive spaces. They need to execute. They need to hire talent. So I don't believe in this trend. Or at least I think we will see examples of it, but I don't think it's going to be a broad trend where with 10 employees, you get to $100 million in ARR. I don't think that's...
Okay, so what trends are you kind of seeing or passionate about in enterprise software, for example, that you don't think are getting enough attention in the venture community?
Oh boy, venture is very competitive. I don't know that anything is not getting enough attention.
Is enterprise SaaS dead? No.
No, for sure, no. I really don't think so, nor do I think systems of record are dead. Owning the data, being the core data store for enterprises will continue to be very valuable real estate. You're not going to displace Salesforce or Workday or SAP or whatever with a bit of API sprinkled on top. No, you need to build a real business. You need to go after Salesforce, not on top of Salesforce, if you really want to be successful. And so I actually think we're going to see I don't think we're going to see. Here are a couple of thoughts. At least in the apps space, I think what's different today than with the last kind of major revolution in enterprise software, which was moving applications from on-prem to the cloud, which actually put all incumbent vendors in a huge disadvantage. It required a completely different product. So it required them to cannibalize their existing revenue stream. It required a completely different skill set to run these massive multi-tenant applications in the cloud. There are only a couple of legacy vendors, I would say, that successfully made the transition from on-prem to the cloud, and that's Adobe and Microsoft, right? For the most part, SaaS just destroyed the entire legacy application software ecosystem. I think what's different now is AI is a fairly democratic evolution, accessible and available to companies of all sizes, to anybody. Salesforce is equally well positioned to, adopt these technologies as are startups. And so back to my point, you're not going to disrupt Salesforce by AI-ifying a traditional CRM app. So I don't think those are great opportunities, but it is an opportunity for startups to completely rethink, a particular market or workflow, given the availability of these technologies, and ask, why do we do things the way we did? If we had AI, we can completely rethink the business process, the workflow, the value prop, et cetera, to customers. And I do think this is the exciting revolution that is happening right now. It's people are completely rethinking business process. I also think the reason AI has created this renaissance of vertical applications is, there are a lot of vertical workflows that previously were impossible to target or address with enterprise software. And I think AI has really empowered the industry to think anything, the entire BPO industry
I was going to say services like outsourcing anything.
I've been thinking about that. Like, boy, what happens to the BPO industry? Like over time, in all of these workflows can now become, hundreds of millions of dollars like revenue software companies.
Just look at UiPath, the same thing.
I mean, UiPath, like the whole workflow RPA and BPM,
RCM, yes,
like that it's really exciting. So I think it's an opportunity to take a step back in first principles. Like, is there an opportunity to rethink something as opposed to just slapping some AI on top of an existing workflow application?
Yeah, that makes sense. We believe the same thing, obviously, at Ripple. Villi, you and I speak, quite often, and I know you're a pretty big adrenaline junkie like I am. You go on pretty extensive backcountry skiing trips. You obviously get a lot of energy from being outdoors and doing a lot of activity. What's the thing that gives you your adrenaline rush in your day-to-day job of venture capital and working with startups?
The best feeling I have as a VC is kind of looking at my calendar at the beginning or at the end of the day and having met like 4, 5, 6 awesome founders. There's nothing better as a VC than that. Like, just at the end of the day, just your head spinning with excitement, where to even spend your time over the next few days, because you met 4 or 5 amazing people with like amazing ideas. That is freaking awesome. I just love that part of the job. And when I see my calendar, it's a bunch of like internal meetings or strategy meetings or, anything that's not actually talking to founders, it just sucks the energy out of me. I really don't like it.
Well, good thing you're a solo GP. You don't have internal meetings just with yourself.
Sure. I mean, that will change.
For now.
Like I'm trying to build a firm too. But one of the best things about like being on your own is, yes, I get to choose how I spend my time. Candidly, when you start a venture capital firm, there's a lot. You also kind of a startup, you're a business owner. Like
totally.
Somebody needs to make sure there's like Wi-Fi, in the office, and somebody needs to make sure that the new employee has a proper onboarding experience, and somebody needs to make sure that like accounts are created and there's a laptop on their desk when they join. So there's a lot of other things that come with running a business, especially when you're a startup. But if I can tell you, that's the best part of like my life and professionally is just when I meet 4 awesome founders in a day, I go home and I'm super.
That's awesome. I love that. Thank you so much for sharing that. Before we wrap things up, we always ask our guests their fast favorites. So first off, Villi, your favorite podcast?
Favorite podcast? I don't listen to a whole lot of podcasts, to be honest. It's probably acquired because I think these guys are just the best storytellers.
Yep.
In the world. And so I really enjoy learning about companies in a way that they do it such deep and insightful.
Any ones that stand out for you? It's a big one that people announce here as their favorites. Any ones that you really stuck with you? NVIDIA, LVMH,
I love the AWS one.
Oh, nice.
I love the Nike one.
Nike one was fantastic, Eric. For sure.
The Nike one was awesome. I listened to it with my son. I'm like, dude, we listen to this. This is so cool. You're going to learn so much from listening to this podcast. So yeah, I think those guys are great.
Nice. Next is your favorite newsletter or blog?
Probably more recently, InnoConnects by Nathan, I think his last name is Lambert. And he kind of reports, I don't know if it's daily, but a few times a week on the latest trends in AI. And he's really smart and thoughtful. So it's a good way to keep up on what's happening in the AI industry.
Cool. I know you're a tech gadget kind of guy. So what's your favorite tech gadget these days?
Not as much of a tech gadget guy. I still think this watch is the best product Apple has released in
Wow. I'm wearing it too, but why are you so obsessed?
I just love it. It has everything about it, the way it's built, the durability, the functionality. I leave my phone behind oftentimes these days.
You don't wear it when you sleep, do you though?
I do. I wear it
Oh,
when
no.
I sleep. I never take it off. I never
That's
take it off.
cool.
It's not my primary health tracking. I do use
The Whoop as well. Yeah, I couldn't wear both at the same time. I took it off.
I still think the Whoop for fitness tracking, sleep tracking, just health tracking
Nice.
is the best product out there. So yeah.
All right, fair enough. Next is your favorite new trend?
No, that's a tough one.
Personal or professional?
Favorite new trend maybe is all of the new green energy that is coming to life, both from a price performance perspective, so solar achieving the scale where it need not be subsidized. It actually is the cheapest source of power we can create. So that's really exciting. And also from kind of the AI renaissance that we're seeing and the power demand that we're seeing in the market, or the growth in demand, leading us to seeking to bringing back nuclear and investing in nuclear technologies. I think that's super exciting and I love it. And I think that's great.
That's awesome. We haven't heard that one on the tank, but I like that. And next is your favorite book?
Favorite book is probably The Brothers Karamazov, which is a Dostoevsky book. I read it when I was in college. I've probably read it 2 or 3 times. It had a huge impact actually on my life. I studied philosophy when I was in college, and I strongly recommend it. I think it's the greatest book ever written by a man.
Wow. Okay, that's a big endorsement. And last but not least, your favorite life lesson?
My favorite life lesson, something I try to practice is, and it's free, just be kind. Be kind. It costs you absolutely nothing. It's easy to do, and it has such enormous impact on the people you interact with, the people around you. And so my life lesson and my advice to people is be kind.
Fair enough. That's a great life lesson, a great way to end it. Thanks for joining us in the tank today for a second time with Villi Iltchev, founder, managing partner of Category VC.
Thank you. Thanks for having me.